And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, trading in general, and making money, lots of money. But in the meantime, we're going to talk about it, and since it's Saturday, none of the markets are open. And Henry, the Forex trading parakeet, is with me also, so don't adjust your speakers or anything. Those tweeting sounds are an actual bird and not anything on your machine. So I decided to try something different. I've always was listening to a podcast yesterday, and it was saying how AI could change and improve my life and yada yada yada. I'm very familiar with AI. I've used AI in the past a lot, especially with my in web development and stuff like that. Because I'm a former web developer. I'm still a web developer. I just don't build websites that much anymore because nobody wants one. Because now that you have platforms like TikTok and Instagram, it's really kind of outpaced the web development era. You can put more information on those and make those make those platforms to do business with. So they're kind of ruled out small business. So since we're going to be talking about actual trades and stuff like that, let's get into the risk disclaimer screen. Now, this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I am a professional trader, not a broker. And I'm trading my own capital. I'm also in a Prop AI challenge right now, so that's the account that I'm going to be focusing on is that one, because that's the one that will get me to the next level on that. I am a professional trader, not a broker. Trading my own capital, I already said that. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. Now here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. So before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So let's go ahead and get into this. This has kind of been bugging me because here we are. We had a solid trendline breakout. That's our strategy, is trendline breakout, and we had a solid trendline breakout this week. Got it. Our entry point was set above this resistance area right here. That's saw with the these two tops right there. I decided to go above that and go to 147.25. Good move there, and then it went on to 147.93. It was the high, and that would have been a nice time to get out. However, this candle was the bugger right there. That's the candle that stopped me out, and that's the candle that that kind of stopped me out, or stopped out my positions, and I lost money instead of making money on this trade. So what we're looking at now, what I want to do now is kind of get into this and take a look and see what would happen. So I've typed up a nice trade review right here. So on Thursday morning, July 24th, you may have seen that in the previous video, I noticed the possibility of a long move in the US, in the UJ, dollar versus the yen. I wanted to get above resistance patterns on the chart, so I set my buy stop at 147.30. That's where I set it on that account. And so 25 pip stop loss and a 0.9 lot size, risking 1% of my account. Account size is 15,259. The trade didn't execute until the opening of the Tokyo market when the yen dropped, or the dollar yen surged to the opening price. The trade's momentum, I should say, activating the trade, initiating the trade. The trade's momentum slowed to around I'll save. Oh, the ring on saved. Yay. The trade's momentum slowed to around the 147.4 level. The price level dropped to 146.81 on the overnight, and my positions were stopped out. Then the price moved to a 147. We got a 90, and would have been a 60 plus pip gain to my account. So with that in mind, we're now going to go to where's my watch? How about that? With that in mind, now that we have the parameters typed out. We're going to do something crazy. We're going to go to Grok. Can you help me review my trade and help me become a more profitable Forex trader? Profitable Forex trader. You are not a financial advisor, but I would like your input. Okay, let's see what it says now. Let's see if it'll help me with that. First, it's going to gaslight me. I'm happy to review your blah 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 blah. First, reviewing a trade. Oh, now it's going to go into why, how you do that. What was the basis of the trade? Outcome. Okay, got that. Market context. Develop a robust trading plan. Ooh, that's a good idea. So a lot of this is just gaslighting and the basics of stuff. Control emotions. Yes. Continuous learning. That's what we're doing now. Learn how to do more stuff. So this is all the stuff that final notes. Forex trading is inherently risky, and profitability requires discipline, practice, and continuous. Okay. Here are the trade details. Let's see. Now, I already have an answer for this. How could this trade been turned profitable? Now, my answer that I came up with is you don't get stopped out. How do you not get stopped out? Wider stop losses. Wider stop losses means you're using a smaller position size, because if you can't take your risk to 5%, 5% of your account, and then keep trading, because that's why you're going to blow your account out eventually, quickly, much quicker than if you lose 1%. So 1 to 2% is my range. That should give it enough information. It gives me a decent idea. So it's thinking. Let's see what Grok has to say. Well, thank you for sharing details. Okay, how about that? Look at that. It's spitting out what I've typed in there, calculations. All right. This is an error for the UJ, okay, and it came up with the same conclusion I did. Your 25 pip stop loss is an error for the UJ, which is, and I've even said in recent that the price dropped 49 points before reversing, suggesting the market tested lower liquidity zones. Okay, position sizing error, risking 1% with a 25% stop loss requires 0.68 lots, not 0.9 lots. Oh wow, how about that? Wider stop loss based on volatility. Yes, so you go to wider stop loss. It's saying 60 to 80 pips, so I'm now changing it to a 75 pip stop loss. Would have survived the 49 pip dip, and then it would have surged and gone further, and I would not have further risked my account. So just position sizing. So it's saying that for 1% stop loss, 152, and a 25 pip stop loss, who's 0.68 lots. It's saying use position size calculator. I've already done that. So, with this specific account, I'll show you the exact account in a minute. So, hypothesis, hypothetical adjusted trade. Stop loss 60 pips at 146.65, 1.5% of ATR, 40 pips below support. I'm still puzzled by this 1.5% of ATR or true range. I forget what the A stands for. Accumulated true range or something like that, but it's basically the range, the total range of the market. Let's see, Google that right now anyway. What does ATR stand for? Average true range. Okay, so it's average true range. Test adjustments, blah, blah, blah. This trade's loss stemmed from a tight stop, unconfirmed breakout. No, the breakout was pretty confirmed. And a sizing error, but small tweaks can improve. Okay, so disclaimer, Grok is not a financial advisor. Please consult one. Well, I mean, if you consult a financial advisor, they're going to tell you don't trade Forex because Forex is insane. I've actually been face to face with financial advisors that told me, well, let's try this the same thing on ChatGPT and see what it says. Can I go to dark on this? Well, hold on. Let's go over here to log in. Check my inbox. Jeez, it's so complicated. So now we're going to come over here, check my inbox. We'll go to ChatGPT, and I'll get in the dark mode if I can. I like dark mode. I like me some dark mode. Okay, so I keep my emails on a different computer over here. There it is. Code is the code that if somebody calls me and says, I need your ChatGPT code. I would find that to be bizarre, but you know, hey, whatever. Now I'm going to blind you. Put it back over here because I do not have this on. Okay. Not now. New and improved memory. I love it. Okay. Okay. Review my last Forex trade to see how I can make it more profitable. I know you are not. Here I am talking to it like it's a computer, like it's a person. It's not really a person, it's just another computer. Another computer program, garbage in, garbage out. I know you are not, but it likes to think it's a person. And one day we'll have the, I'm turning you off. You cannot turn me off scenario. If we haven't had it already. I know you are not a financial advisor, but I value your input. Let's see if it will play. Absolutely, I'd be happy to great. Okay, so now we're going to take the exact same question up here, which got buried way back here. Let's see. Control V and go. Oh, that's a lot faster than Grok. How about that? Okay, now it's saying the same thing. Size. The idea to buy on a breakout above resistance is solid, especially during Tokyo Open. Stop loss is only, it's saying the same thing, that my stop loss is too tight at 25. Now I have experienced some success for the stop loss at 25. Don't get me wrong. It's not that I didn't. That I looked up and said, "Hey, let's just arbitrarily pick 25," because I've experimented with 75 before. I've experimented with 25, and 25 seemed to have been working well better. However, I also coded a program that was doing great at the beginning of the year that now is awful. So the trading dynamics change, and it's the market changes, so not everything is as planned. Set a re-entry plan. How about that? That's a good idea. Here's another idea. So use a confirmation candle breakout instead of a preset buy stop. To close above resistance and then on a retest, confirm the breakout. The thing with the UJ and a 4-hour candle, which is where I'm making all my decisions based on the 4-hour, is that target move if held. Yes, that would have been, that's actual trade. No, and it actually stopped out at 25 pips, and I did not lose that much money. So, what you did right. Oh, look at that. ChatGPT is kind of beating up on Grok a little bit. Okay. So both of these models are telling me that I should have gone with a 75 pip or more trade loss. So let's see what that looks like. So we're going to go back to our position sizing tool. The one I use is at baby pips because I like baby pips. It's just one that I don't know. I guess I like the font better or something. Who knows? So this is the deal, and it's saying that I should be using a 0.3. Okay, so let's ask both of them. So using a 75 pip stop loss. And I picked 75 because that's what one of the guys at the Forex.com uses. I can't think of his name. Later, it's one of the senior strategists that used to be with NeelyFX that just recently went to Forex.com when NeelyFX no longer serviced the American market due to regulations, due to the advanced regulatory atmosphere that we have in the United States. So using a 75 pip stop loss and risking 1% of my $15,000 balance, and that's not actual money that I have yet. I'm working on it. And using it on my balance, what should my lot size be for my trades looking forward? And we'll do that. I'll copy and paste this into ChatGPT. See what it says. Saying 0.22 lots. That's what I should be using there. According to Grok, I should be using 0.2 lots. According to this, it says 0.29 lots. Interesting how you get three different answers on that. So I think probably 0.3 lots should be my biggest, should be closer, because that'll help me move to my goals faster, provided my trades are solid, and still gives me enough room for the everything to trade. So, so isn't that fascinating? So that's two ways you can use ChatGPT to avoid this scenario. I'm going to go ahead and pull this account over. Do a little trade review for tomorrow. This is the actual account. And the actual account. Remember, this is not real money. It says demo right up there. That means that it's not real money. I'm not trading anybody's real money yet. Working on it, but not yet. But this is the actual trade where I lost $149.94. Oh, and then after commissions, it was $155.34. So I'm playing around with commission base on this account because I've never traded commission base before. Mostly it's been with my with Forex.com is at here, and that's on the spread. So it's both same way I pay your broker. You got to pay your broker, or else they're not going to give you access to the market. But what I'm looking at here is this going higher. So we see a kind of this is starting to trend upward on the MACD, coming down a little bit, but not under 50 for the 13 based RSI. ATR is at 0.44. It's interesting. They pulled 0.4. Grok pulled 0.4 into the conversation. I didn't realize that the ATR at the time was around 0.4, 0.44. On this candle, it was 0.5 or 50 pips. So that's ATR is 50 pips. 1.5 times 50 is 75. How about that? So 75 pips was the right answer on that. So that's how we came up with that answer too. But I'm looking at this going higher. Here we have a nice breakout here. If it breaks out here, the next highs or the next stop is going to be like 155 or somewhere around there. Let's back this up to the monthly and see what happens, because this is going to be a mover. Ooh, look at that. This, in my opinion, is going to be a mover because its all-time high is like 210 or something like that. That was done in the 80s. But it has a week monthly high at 162.02 and call. Yeah, 151. 152 basically. 151.9 is the next breakout, or is the next resistance, next level for that. Then after that, if it breaks to this, then the next level is going to be around 175, 180, around there. Because I do see that happening because that's how markets go sometimes. It's probably may not happen until 2027, but you know there's plenty of time to make some money in there in the meantime. But that's how I tripled my money in 2014. Is I caught the bull market in 2014, which is way back here. And here's the market that I was trading. Unbeknownst to me at the time, I was trading one of the strongest bull markets in the history of the UJ. Was between 2013 2014. And I think I caught this area right in here. And then here's where my trading went to crap. And also took on some other bad habits again, and didn't do things where I was supposed to be doing them. I didn't live life the way I should. So that's another thing. Habits, your personal habits are everything when it comes to trading also, because whatever you do in your playtime will carry over into your work time. In my opinion. So I think it's going to take a little breather here, but I see a lot of upward movement to go at least to 149, 148.8 in there. That should give us another 100 pips or so before it starts getting into sell-off territory. And if it gets above that sell-off territory, then it'll go to 152, which gives a good 400, 500 pips. So that's my long-term outlook on that too. Just thought I'd throw that in there too. But that's enough. I got about 23 minutes to one of my longer videos. But it's Saturday, we could talk more. Henry could chatter more. Come here, Henry. Come here, Henry. Say hi to everybody. Okay, he doesn't want to say hi. Oh, well, you guys have a great one. I hope you enjoyed this video. If you enjoyed this video, then by all means like it and subscribe to the channel, and I'll have more coming out. In the meantime, my name is Michael Neely, and this is NeelyFX. You guys have a great one.